Nice, 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 nice. Nice, 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 nice. All right, let me get everything set up. Okay. Hmm. Let me make sure because this actually might be it. This actually might be it, man. Hmm. Yeah, so it does look like. Yeah, let me just do that. Let me do that. About like 20 or something. Yeah, because I mean, if it gets down that far, then hey, what's up, Jen? What's up? What's up? All right, so we'll start in the next couple of minutes. I'm going to set everything up. Going to look at the charts. And so the goal of these videos is just to create a game plan just in case the market sets itself up in pre-market. So we're not trying to find something during the New York Open. We already got a plan that we can execute overnight. That's the goal of these live NA meetings. I will still release the shorter versions of the NA meetings. Those will just be quick videos of levels that I'm looking at. Uh, just a recap of the day, and we'll just move forward from there. So far, we talked about this level, at least on the NQ, before the end of the stream. We was looking at this 950 area for price to reject, and boy, did we get that rejection as soon as the market opened. And I think this is about like 57 points right at the open. So this is not a surprise that this happened. And the bulls finding support here at this trading range, that's also not a surprise because I do believe that the price is trying to at least retest all-time highs. That is my assumption until it changes or until the market changes. So right now, if you can see it, price is definitely, it appears that it's trying to find support at this previous area of resistance. So I wouldn't be surprised if the bulls do find support here and we do see that blast off. So I wouldn't be surprised because first we got, so where is it at? So we got this move down at open. So we got this move down at open. We have the bears failing to rotate price lower. We have the bulls finding support. We get this move higher. We get a drop and we get a breakout. And usually when I see these two-legged breakouts, I'm looking for a pullback into this prior area of resistance for either a move up or for the bulls to fail and the bears to take over. So this is what I'm looking for right now, and that's exactly where price is. Either the bulls are going to take control and we're going to push up higher, or the bears are going to fail and we're going to push down lower. So that's what we have to keep an eye on, at least with the NQ so far. So let's actually just clear up everything. Okay, I forgot I changed that. NYA, were you in the stream today? I mean, you didn't get the trade today? Yeah, like because usually on days like these, during these low volume, I've seen that the market likes to grind higher. It, we do get sometimes where the market will grind lower, but we usually don't see that for the most part. I knew that if because there was going to be low liquidity, the market was going to do this right here, and we actually caught. I think we was in like somewhere around here this morning, and we caught this move going up. Yeah, we caught this move right here going up, and we held it towards the end of the day. I knew we was going to get a break of this high. I just knew that this high wasn't going to hold. I knew we was going to get a breakout. So now what we're looking for is either for the bulls to continue for continuation, or for them to fail, and we get right back down into this trading range. And coincidentally, we can see that the 200 EMA is right there. So I'm pretty sure that the bulls are going to probably make an attempt to use that as support if they fail and price does trade back into this range. So we're going to be looking for that. You said, what was the reason for the long this morning? So, let me try to, okay. Yeah, I got to learn these new because I made some switches to these hotkeys because they were interfering with my regular typing. So I just got to get used to these again. But the reason for the trade mostly is because, I mean, it's been bullish. I mean, these bulls have definitely been regarded. They've been regarded ever since that FOMC meeting. And I don't even think it was FOMC, or was it FOMC? Whichever meeting with Powell where we first touched 5,100 on the ES, I wasn't paying attention to what number it was on the NQ. But once we broke that high and we started trading into 5,100 and beyond, that's actually when everything started. We really haven't gotten a pullback since then. And the bulls are just not allowing the bears to take their turn and rotate price lower. So that was one reason. A second reason is if you look, you can see that all the EMAs are just sloping up to the upside. And they broke out of this range right here. They broke out of this range, or where was it at? Where was it at? Where was it at? Yeah, because they failed to take price lower. The bulls found support in this range, and we got this push higher. So that's why I was confident in this long, because my risk reward was I can put my stop underneath this candle. I can have my entry right here, and I had all this downside, or I had this little downside for this potential risk to the up, or this potential reward to the upside. And I think, well, did I explain this in my last? Yeah. And this is how I like trading. I mean, because at the end of the day, we really don't know what the market is going to do. We really trade probabilities. When I trade, I want to make sure that my risk looks like this and my reward looks like this. If my risk reward doesn't look like this, I'm not taking the trade. I'm not going to take a trade somewhere in the middle. I'm going to take the trade either at the top or at the bottom. And we also took this trade also on the NQ as well, or not the NQ, but the ES as well. Let's see, where were we? Where was we in the ES? Yeah, we took this. I think we got in at this 19 or what was that? 27. The stream started, so we got in around like 19, 20. Yeah, we got in at 19 on the ES. 19, and we rode price all the way up into the end. And I think this was like a what 20? Yeah, about a 10, 15 point move up. So we caught this both on the NQ and the ES this morning. And I took this trade for the same reason. The bears are failing to rotate price lower. You can see that at the open, you can see here at the open this morning, the bears failed to rotate price lower. We had a bearish open, they failed, and the bulls took complete control of this market. So I guess now I'm getting into the the shut the fuck up and color mode, because these bears are not going to allow, or these bulls are not going to allow price to have a real pullback. So now I have to actually try to find areas where I have to try to get in as low as possible, even though price is trading higher. I have to try to find an area where I can try to get in as low as possible, where my risk is still small, my reward to the upside is big enough, because we have a 10-point first target. So we need to at least make sure that we have enough room for a 10-point target. And we just move on from there. So it says, but other price action sucks. It says, I'm thinking about moving to another symbol until we come back down. I mean, in today's market, well, I guess a better question is, what do you plan on trading? Because if you're trying to go for crude, gold, any of the commodities, the price action isn't any better. Yeah, you'll get the rotation up and down, but if you're an impatient trader, it usually takes those commodity trades to, before it actually gets down from top to bottom, that's usually an all-day trade. Usually an all-day trade. If you want to get decent risk to reward without scalping heavy size, it's usually an all-day trade. And right now, the Nasdaq and the ES are the only instruments that I know of so far that has these rotations back and forth to where you can make money on both sides. However, right now, the indices is being fueled off of Fed bullshit right now. So, I mean, we're going to get this until the Fed actually comes out and say, yeah, we're not actually cutting rates. You guys knew this the whole time. And I think that's where we're going to see the market crash when the Fed actually admits to it, because they're alluding to not cutting rates, but they're not specifically coming out and say, yeah, we're not cutting rates. And because of that, well, people are just running with it. They're just seeing the data. They're just making assumptions that Powell is going to cut because of the bad inflation data, the housing market, the used car market, the I mean, all the markets. I mean, obviously they're seeing a decline, so they're thinking that the Fed is going to bring the interest rates back down to zero, and we're gonna go back to crazy 0% interest rate la la land, where inflation can run rampant again, undoing all the work that the Fed has done. Which, when you hear that out loud, you already know they're not doing that. So um, we're just gonna get this price action until that happens. So YM or RTY. So the Dow, I'm surprised that you would say the Dow, because the Dow moves just as crazy. Shoot, hold on. The Dow moves just as crazy. I mean, shit. I mean, unless you really have to get comfortable with because she's like the Nasdaq, but it's it's $5 per point. It's $5 per point. So she's just like the Nasdaq, and she usually trades in one direction. I mean, if you can look just looking at her, you can tell that yeah, you'll get your pullbacks, but she's just as crazy as the NQ. And I do see a lot of people talk about the Russell. And honestly, I mean, the price action does look good on this. This does look like a decent price action. I'm not going to lie. And I think the Russell is also $5 as well. Let's see. So if you got into this trade, I think this was on the 23rd. What was the 23rd? The 23rd was on Thursday. The 23rd. And so this trade happened at 11 o'clock. And you stayed in this trade until 1:30. You caught this whole move, 279, and it got all the way down to 45. I'm not going to do the math in that on my head, so I'm not doing that. So that's 34 points times $5 per points. So on one contract, you made $170 on this move, and this was what, from 11 to 1, so that was about like a 3-hour trade. You made $170 on one contract in 3 hours. But if you stayed, if you got in this trade at 7:30, 8 o'clock in the morning, so let's say 2101 minus 20.46. So this is about a 55-point trade from top to bottom. And on one contract, you made $275 on one contract. So I think the RTY is definitely a multi-contract instrument where if you really want to make money, you're going to definitely have to put some risk on multiple contracts, at least five to make this drop, this weight worthwhile, at least five. Yeah. Yeah. But all right. So let's do some work on the Nasdaq real quick. So I think the NA meeting just released, and looks like the bulls are failing so far. We did tap into this area of resistance, and this resistance was made all the way back on Thursday of last week. So it does appear that the bulls are failing at the moment. Let me look at this. So I do see that price could potentially find support at 871. 874, 892. Let me see, 892. Okay. Let's go on the higher time frame real quick and see if we can see it. Okay, yeah. Because we got this range breakout. So let's actually look at this. Let's look at this. All right, so we got this range right here. We got this breakout. The bulls trying to buy price back up. The bears successfully defending, but they didn't take out this low. And because they failed again to rotate price lower, weak ass bears, the bulls took advantage of that. And then we got this move up higher. And now the bulls are trying to use this area that was previously resistance as support. So the bears are definitely going to have to hold off this area. If they fail here, then I'm going to be looking for price to touch somewhere back into this area, possibly double bottoming, possibly 823 to 802, 823 to 802. I can see the bulls coming right back in here. And actually, now that I see it, Okay. There is a little right here. So there is an area where the bulls can come in right here around that 823 to 802 area. The bulls can definitely come back in and they can find some support right here. And so this is what I'm going to be looking for, at least on the NQ, or at least this is what I would be looking for on the NQ if we do get that move down. But if we get this move up, if they do defend this area, then I'm going to be looking for the bulls to retest that 19K level, possibly 1915 or 1911 at the most. 1911 at the most, unless the market is going to take out this high at 1922.50, if I'm not mistaken. If I'm not mistaken, that's the all-time highs so far. But the way that they got that double bottom at that 36 level, the way they got that double bottom, 870. Mm. Actually, let me look at this real quick. Let me look at this. All right, so with the NQ, yeah, okay, I can see that happening. I can see that. Okay. Yeah, I can see that. I can see that. So what I'll be looking for is from 881, 881, which is right there, to about 855. Somewhere in this range. Somewhere in this range is where I think we can find support. If the bulls don't find support here and they fail, 795 to about 770. Yeah. We'll do this real quick. Yeah, so if the bulls fail here, then I can definitely see them trade price down lower into that 295, that 290 area. And I'll try to show you why. Yeah, I think that's that looks about right. Yeah. Yeah, because you can see that on that they tried to push price higher here at this level. This is where you got your break. This is where you got your breakout, your breaker structure at the same level right here. And you can see that they found support at the bottom of this range at 770. So the 770 range to about 795, you can see a lot of price action here. So again, you can see the bulls trying to find support here at the top of this range. They failed. They broke through. The bears came right back in and used 770 as resistance. They sold it down. You can see them defending this area And then you can see the breakout happening first at this area. And then at the top of this range, we get a breakout. They come back in, they retest the same area. And from the same area, we see this breakout leg higher. We see that breakout leg higher. And then again, the bears use this as a resistance again and again. And then they broke out from the same level again. So obviously this area right here, from this 995 to 770 area, is definitely an area where the bulls and the bears, they usually meet when price gets into this area. Or I'm sorry, this is where they compete when price gets into this area. And so this is going to be an area where if price does trade into it, I do expect to see a reaction. And the reason why I'm looking at this level right here, oh crap, let me see. I mean, it's obvious. Well, my bad, I shouldn't say that. Resistance turning to support. Obviously, this is resistance. You get a breakout from this level. They're trying to use it as support. They broke through it, and we got a breakout right here. And this breakout took out this high. So when I see a breakout higher, a strong breakout higher, I'm going to see if this retest right here is actually going to be strong. This is where the bulls have to protect. They have to protect this level right here. I mean, we may get price to trade back into this range, but usually we see price retest the top of this range, and then we see a move higher. So obviously, if I'm going to take this trade, I'm going to take the safer trade, especially when the price action is this low and you really don't know what the hell is going on. I would wait for this trade. I'll wait for price to trade into this area. Now, if I do see price break into this range, I really want to see the bulls hold off this area right here. If I see bullishness, or if I see the bulls defending this area and they don't take out this low, then obviously I would have a low risk, high reward trade. I would get in long, have my stop a couple points underneath these candles, because honestly, on the NQ, she doesn't respect structure, but at the same time, if you see a double bottom, especially when it's this close like this, if she runs these lows and you're wrong, it's going to be a stop run. And price is going to get to this area. So you might as well put your stop a couple of ticks below this low, because you don't want to get caught in the stop run. Now, if it's usually a fake out, for what I've seen, it's, you see how she took this low and she only took about like 2 points from this low. That's usually what I see. That's why I usually keep my stop like 5 points underneath highs and lows with NQ, because if she runs them, she's just going to the next level. You'll just be used as liquidity to get to the next level. So that's what I'm going to be looking for with the NQ. Right now, I mean, let's look at the news again. I mean, we have Crash Curry tomorrow at 9 o'clock or around 9 o'clock. I don't know why this does this. Like, I don't get it. I don't change this. I don't know why this. Anyway, then it does this crap, and then it still is not doing what I want it to do. So for tomorrow, apply, and then set it to my time. Okay, do whatever, man. Okay. And then filter, clear, United States, China. and the euro. Okay. So yeah, we got Fed cash Kashkari at 8:55 Central Time, and then right after Kashkari, we got the consumer confidence. Now, I believe this is a survey. Um, if the market wants to use this as an excuse to pump the market, I mean, it surely can. But I mean, um, we have Fed Daily and Cook speaking at 12 o'clock, and we have this bill and note auction from 10:30 to 12. So I mean, tomorrow can definitely move and set the market up for Wednesdays because it's going to be Wednesday that's going to be it's going to be Wednesday that's going to start the volatility because we have the beige book and that's what's going to start everything. And coincidentally, right before the beige book gets released, we have a Fed speaker. So this is going to start everything. And this should be considered a if Powell is like a level 9 event, the beige book could be like a level 7. This is definitely going to move the market. It's going to move the market one way or the other, depending on what it states. So if you're going to have a trade open at this time on Wednesday, just be mindful of it because we will get a volatile move, or it's highly likely that we would. And then obviously Thursday, we got GDP. Depending on what this says, this will definitely move the market. And if we do get a pump based on this data, I believe that it's going to be a one-way market that day. We're not going to get a pullback if it does pump, because if this comes in under expectation, if this shows that GDP is down, then the market is definitely going to assume that Powell is going to see this and say, "Damn, we really need to cut rates." If I'm not mistaken, no, that's CPI. Never mind. But yeah, this is definitely going to be a market mover. Now, if it's showing growth and strength, we don't want to see that. We don't want to see the GDP showing growth and strength. Well, actually, we do. Let me rephrase that. We do want to see this in the real world, but in the market, in order for this market to pump up, this needs to come in bad. If this comes in good, then the market will most likely dump, most likely. And on top of that, we have initial jobless claims. If the jobless claims comes in under expectation, that's another catalyst. If people aren't quote unquote losing their jobs, which, like I said, this market, it really doesn't care. But if people aren't losing their jobs and the labor market is strong, then obviously Powell won't have any reason to cut rates, and that will be the speculation. He doesn't have a reason to cut rates. Pending home sales. I mean, we all know that the home sales is low. I mean, you can talk to any realtor, you can talk to any real estate influencer, well, not talk to it, but watch any real estate YouTube video, people that track data of home sales, of how people are having a hard time selling their homes to the point to where they have to actually undersell their homes for what it's really worth. And it's still not getting sold. So as an example, if somebody is selling their home for 500K, they're dropping their prices to about 250 to 300K, and that still is not selling. So, but obviously the news will tell you that we have a strong market. And obviously on Friday, this is what everybody's going to be waiting for. I'm pretty sure the PCE is going to piggyback off of what the GDP says. I'm pretty sure. And or let me rephrase that, the GDP will give us an idea of what the personal consumption expenditures will say. And this is actually, it just tracks the individual household, how a household, how much they're spending, what's going in and what's going out, basically. And this is basically the consumer. So this tells the Fed, I guess they see this as a more real, more accurate estimate of how the consumer or the health of the consumer is in the United States. And the Fed uses this data to make their inflation decisions, or at least that's what, yeah. So yeah, we definitely have a volatile week starting after Wednesday. So I wouldn't be surprised if we do get a push higher, take out these highs, and then see the market trade lower. And then on this data, depending on what it says, we can see that move back up. But we'll see. We will see. So let's actually look back at the NQ. And so like sorry, this is the NQ. Yeah. And so we're going to see if price actually holds in this area. Because if it does, then I'm pretty sure that the bulls are going to try to push price higher. But we'll see. But if not, I would recommend waiting for price to trade back into this area. The risk reward on this is, I mean, you have all this potential upside to catch. And honestly, I really wouldn't keep, like, I would still keep a 27-point stop on this. So yeah, I would keep a stop underneath this candle. Why not? But then at the same time, this candle is right here at resistance or at support. Hmm. What is this? 810, 730, 750. So 767s like are basically 770, 770. Yeah, I would get in here and I would have my 27-point stop here. I mean, if it trades through all of this, then you're wrong basically. But I prefer this risk, this risk to this potential reward versus trying to get in here and trying to find an entry just for a retest of this high. I like this trade better than this trade. So NYA. So when it comes to the news, for me personally, I mean, I guess I could do that. But honestly, these news events it's kind of hard to do a video on how these news events affect the markets because people interpret it differently. Me personally, I try not to even try to understand the news. I can understand what it's saying, but obviously I wouldn't know how the market would react to the news because sometimes the market is, oh, good news is bad news, and then they'll flip around and say, oh, bad news is actually bad news and good news is good news again. So I'll try my best to explain what the speculation is, but it wouldn't be evergreen. So the compromise with that is if I'm doing a live stream, I'll explain it the best way that I can. And then go from there because, like I said, the market, the narrative of the market now is the Fed going to cut rates? That's the narrative of the market. That's what's actually fueling this market higher. Is the Fed going to cut rates? Are we going to go back to that zero interest rate environment? So now the data is being seen through that lens. The more bad news we get, the speculation of the market is now Powell has to cut rates because the market is obviously going to shit. However, if you turn on your local news channel, it's going to say that the market is strong, the labor market is strong, everybody is strong, and don't believe what you see, believe what we tell you. So, um, and if you look at it from that perspective, they can sit back and say, well, you think that the market is weak, but the stock market is continuing to make all-time highs. So it would, even though people are living check to check, even though people are saving more instead of consuming, they can say that, oh, the stock market has made all-time highs, blah, 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 blah. So, I mean, so that's why it's just kind of, that's why I choose not to really trade the news or try to really understand how people are going to interpret the news. The most that we can do is just trade the reaction to the news. All right, so it looks like price is finding its way here. We'll come back to this because we're not going to sit here and wait for this. We'll do the ES real quick. And yeah, so the ES is doing the same. Oh crap, this is still the NQ. Okay, so with the ES is the same thing. So it got to 35, which honestly, 35 is not, I don't have 35 as a real level of resistance on my chart. It got close. On my chart, I had 39. On my chart, I have 39. 39, 38-ish. Mm. All right, I take that back. Apparently, yeah. But I still had 39 on my chart. 39, 38. Yeah, 39, 38. I think 35 is kind of too low. But I mean, like you said, I mean, the market can do whatever the hell it wants. I feel that this might actually just be a pullback and not necessarily a reversal. Hold on, give me a second. I gotta stop doing that. Next problem, I'll go better than that. Oh, we'll just do that. All right, so we got this small area right here. Let's go break out. And so just like the NQ, so if price fails, and let me say this first, the ES obviously trades differently than the NQ. I would never, ever recommend taking a trade in a balanced area. I would never, ever recommend taking a trade on the ES in the balance. You can get away with it on the NQ. You can definitely get away with it on the NQ, but you won't get away with it on the ES. I mean, do you see the difference? Obviously. And it does appear that they're trying to find support here at this 81, or it did. Oh, like I'm on the wrong chart. I was like, why is it not showing this? So it does appear that they're trying to, but I still wouldn't try to long this. Hmm. I would definitely wait for a little bit more confirmation because they could be trying to get down here to the 70 level for real though. somewhere in this area, this 81 to 70 level. They could be trying to get here. Mm. All right, but going back to the ES, I would never recommend taking a trade in a balanced area. With ES, the name of the game is to look for range breakouts and an opportunity to trade below or above a range. Mm. Mm. So if price does find support here, I believe that could be the area where we do see that run up to that 48 to about 58. So I think I did this. So this area, so 48 to about 39. I'll just do 40. I'm looking for price to actually trade somewhere up in here and then get a rejection. But if the bulls does manage, if they manage to find support here, I do expect for them to trade up in this, possibly a retest, and then a move back up here. And if the bulls fail to take price higher here, then I can see a rejection down. However, the ES actually has an other supply zone from right around 361 to about 553 or 353. So we have two areas where the bears can come in and we can get at least our 10 to 20 point reversal down lower. However, if the bulls do manage to hold this area here at 22, we can get our 20 points going higher. But like I said, I wouldn't take this trade. I'm not saying that it wouldn't work. It's just too much risk on an ES trade like this. That's too much risk for an ES trade. It's too much risk because this can definitely rotate. This can definitely do this. We can definitely see this, a break, a retest of this high possibly, and a move down lower. But a trade that I will take, and I'm actually going to set a limit here just in case we get it tonight, just in case. I am looking for the market to trade back into this 300 to 2. Yeah, from 296 to about 293. 296 to 293. So basically this area right, or no, that's not the area. This area right here. Or I'm sorry, 300 to 296. So this area right here. And it's going to be more likely that it hits that 300 level possibly. That 300 I will start my position probably like 301 to front run it, and then have a scale in at 296 and have my stop at 91, 91, 90. Yeah, somewhere around there. But honestly, this is a better trade. This is the trade that I would look for price to trade down back into this area. We get the consolidation, and then we get that move back up to all-time highs. I would prefer to take this trade versus this one, even though this trade right here may work tomorrow. And that's actually what I'm kind of hoping that it doesn't happen, because if we can get a move down lower and we can find support somewhere back into this support area, that move up would be a better trade than trying to catch the top. Yeah, what's up, Katie? What's up? But the way that this is looking so far, the way it's looking so far, this actually might be the area of support. The way it's looking so far, but like I said, I would never recommend anybody taking that trade. You would have to take that trade on your own risk, at your own risk. And it does appear that the Nasdaq has touched this level, and it does appear that it is trying to make an attempt to trade higher. And this is what we've been dealing with. The market has been dealing with. It's either you have to take these high or low reward, high risk trades. And that's what people has been dealing with up until the, well, I mean, it's still going on. You don't ever want to take this trade. It's not a great trade. It's not a good trade to take. Now, obviously, you can have your stop and all that other stuff. I mean, is you can risk like 2 to 3 points, obviously, to your with the you design your trade to your risk tolerance. However, the way I look at it is, I don't want to give the market unnecessary amount of points. If there's more risk to the downside and not too much risk, or is the reward to the upside is not that great, the way I see it, I'm giving up a turn. If I'm risking the same amount per trade, and on a 150K account, I only have $4,500 of drawdown that I'm allowed. The way that I trade, I only have about what, 6 or 7 tries. So let's just say 400 divided by 600. Yeah, so I have about 7 tries. 7 tries until I blow the account, if I remain consistent with my risk management. You have 7 tries until you blow the account. And taking a trade like this, where I can easily give up some profits, or not some profits, some of my drawdown, to a trade where there's more room for downside than upside, I would prefer not to take that trade. I would rather wait to see what happens, allow other traders to take this risk, and it may work. Like I said, it may work. But when price finally trades back into this area, I'm willing to risk one of my tries here for a long versus trying to long this. So that's what I'm going to be saying. And yes, Katie, honestly, I wouldn't be surprised. Honestly, I would not be surprised. I wouldn't be surprised, man. I would not be surprised. Because, I mean, that's the kind of market that we've been dealing with. I mean, let's look at the 4 hour. I mean, the 4 hour is showing like we could reverse here. And on the 4 hour, let me actually look at this on the NQ. It's saying about 8:30. Hmm. $50, yeah. And then you got the 21 EMA coming, sloping up as well. I wouldn't be surprised if anybody shorts this, honestly, with the 4 hour looking like this. But you can see that the bulls they're coming in. They are definitely coming in. So we'll see. We'll see what happens overnight. Honestly, because today was a low volume pump, obviously it pumped right into an area of resistance. And if you took this short at the start of the session, I mean, this was a great short. This is a great short right here. It says up, then down. Yeah. Hmm. Hmm. That a coincidence? Isn't that a coincidence? So this level right here, this 762. So this was May 26th. When was May 26th? Oh, that was Friday. Is this right? Let me look at this real quick. Anyway, so I have a value area low right here at the top of this candle. So this actually might be, yeah, I would actually wait. I would wait for this level right here. I would wait. I would go long here at this 762 level. 762 to 772. So this 10-point range right here. This is what I would wait for. This range right there. So let me turn that into gray so we can turn that gray. I would wait for this. This is what I would wait for. I think that has the best risk reward from 772 to 761. And depending on that trade, I'll have a 27-point stop. If I take that 762 area, that gives me this amount of risk right here. Down to 35. $762 to 35. And this would be my risk. I would stop out once it hits 35. And I think this right here is great risk reward. You get in at this level, you stop out at 35. For a potential retest of these higher structure. I mean, honestly, if you want to make your all you really need is I think it's 30 points. Like on one, well, I usually trade on. So let's just say that because you can actually have more contracts on with the NQ. So let's just say that you have 18 contracts times 2 times 27. Oh no, that's not no, that's a 100-point trade, $900. Um, I mean, what's a great for micros? Um, like maybe 13 possibly. Let's see how much that is. 13 with a 27-point risk. No, damn, that's just as bad. So 500 divided into 2 divided into 13. That's just as bad. 9 times 2. So I think, oh, it's 11. I think 11 is good. Times 27. So with 12 micro contracts risking 27 points, that's a $600 loss. Which, yeah, okay, scale, yeah, $600, but you wouldn't be able to scale into nothing. But if you do a 9 points, 9 contracts with a 27-point stop, that's $486, right around that 500 mark. And you're risking 27, and let's just say like for 45 points, which is 45 to 50 points is definitely easy. I mean, we dropped about 50 points right at open. And so with this area as support, we can definitely at least see at least a 870. Yeah, we can definitely get a 100-point trade on this. But we can also definitely get a 50-point trade on this. That's definitely a 50-point trade. You can definitely do that. Around like 820. Oh, hell yeah. Hell yeah, you can do that. If we get a bounce here in this area, we can definitely see 18K. I'm sorry, 800 to 820. We can definitely see that. But obviously, I would hold it until we get a retest of a high or something. But that's just me. And 9 times 2 times 27. Yeah, so 9 micro contracts looking for 50 points. Yeah, that's a 900-point trade. That's 900 points. But if you want to go for like 5 or 700, I think 700 is good. Yeah, about a 36-point trade. A 36-point trade will get you that 650. So like a 40-point trade, I think, will probably get you that $700. Yeah, it'll get you 720. So a 40-point trade. So 40 points risking 27. You probably won't even have to use the whole 27, but if you do, it's only a 500 or 400 and something. Well, actually, the math again. On 9 micro contracts, 27. So yeah, you'll be losing $490. 490 to make 720. And you can easily, that's a 36-point trade. You can easily get that 36 points going up. Or I'm sorry, a 40-point trade. That could be easily done if you get into this area of demand for a move back up. Boston. You talk about basketball? Boston. Oh, the Celtics. Okay. Yeah, I agree. The Celtics has always been a solid team, man. They've always been a solid team. It seems like they've always Like they have superstars, but their superstars are a part of the team. And I think that the owners of this, they let them know, like, nah, we don't play that LeBron shit. You're not the Celtics. You play on the Celtics because they play team ball. The same way, kind of like with the Timberwolves now, they play team ball as well. And that's how they were able to beat these little, not these little, I apologize. They're not little. That's how they're able to beat these super teams where it's only one player and they got uh, role players supporting the main player, like your KDs, your LeBrons, stuff like that. And that's why those teams will always fail. Those teams will always fail because you have one person doing all the work. I'm, I mean, the closest thing to that, or a good mixture, obviously, is the Golden State Warriors, where obviously, um, what's his name? I don't know why his name escapes me, but you have three superstars on that team, but they also are role players to Steph Curry. That's his name. There's a system built around Steph Curry, even though his system has great players like uh damn, what the hell is this? Why am I losing his name? Anyway, so that's the closest thing to that super team that works with the Golden State Warriors. But outside of that, it has not worked. So yeah, Boston, I do believe that Boston will finish this. But unfortunately, I think the Timberwolves are going to fall to the Dallas Maver to Dallas. I think they may get swept unless they come out and win the next three games, even though they should have won game two. They let game two slip between their fingers. They should have won game two. But yeah, I mean, it is what it is. But yeah, yeah. But I think that's it for the NQ. That's what I'll be looking for. I'll be looking for that 62 to 71 entry. I want to see a bullish reaction somewhere in that area. And yeah, it looks like, yeah, that's what I'll be looking for. I will wait for price to come down here versus taking a risk. And I mean, the risk reward is not good on this trade. So I mean, you could take this trade. It'll probably work. It looks like it's working now. It looks like it's working. I think we got to 85, 84, and we possibly can get a retest of this high. So right now, it looks like it's working. But like I said, I wouldn't take it. On the ES, same thing. It does appear that the Bulls are trying to hold off this area. But if this is a real short down, then I'm going to be looking for price to trade back into this 298 to 29, or I'll have my first entry at this 301 area. So I would have an entry like this.
Order rejected.
Oh yeah, this is the ES, my bad. Anyway, so I would have my first order here at somewhere at 301. I want to see what they do here. I want to see if it's a strong bounce in this area. Yeah, yeah, possibly at 301. Yeah, I would have my first order sitting here at 301 and possibly a second order sitting at 296. Possibly it's 297. So my 15 contracts would sit here at 301. And then I would have another 5 here at 97. And my stop would be all the way down here, which honestly, I should just really put it underneath this low. If it trades underneath this low, I'm wrong. But having this area right here, yeah. I guess this stop will give you hope. I mean, hopefully it's just it'll stop before and then it'll go up. But this is a safer long for the ES. This is a safer loan. Great risk reward, and we can definitely get at least a retest up 317 at least. At least 317. If we see that breakdown, we can see this at least. And then most likely we can get this right here. So that's what I'll be looking for tomorrow. This is what I'll be looking for tomorrow. So, but all right, if anybody doesn't have any questions, and then I'm in the stream here. We went over to NQ, we went over to ES. If anybody has any other instrument that they want me to look at, feel free to put it in the chat. If not, then we'll just cut it here. We'll cut it here. All right. All right, guys, we'll see you tomorrow. We'll do this again tomorrow morning. The stream starts at New York Open, and I'll see you then. Peace out.